Well, the market action last week sure was interesting. First real week of earnings season for the fourth quarter. And from what I can tell, earnings actually came in better than expected. They were pretty solid. I was away in Hawaii last week, so I didn't get a chance to look at as many reports as I'd like to. But I remember before I left, I looked at Intel's fourth quarter report. And I was pretty impressed by the top line and the bottom line. Everything looked really strong, the kind of number that actually got me thinking, wow, this sort of does look like a recovery. I looked at Caterpillar's earnings report this morning, and it wasn't as good. So I'm thinking the earnings reports, they're okay. But what's important is the market action right now. This is a very speculative market. It's a market with a lot of momentum, a lot of traders, and the action actually takes precedence over the fundamentals, at least for the short term. And last week's sell-off was significant, not only because of the size of the decline, a 4% sell-off on Thursday and Friday, but because it was accompanied by enormous volume. In fact, volume on Thursday and Friday was the biggest 2 days of the year so far, and was 41.5% above the year's average volume on Thursday, and 28.7% above the year's average volume on Friday. That's NYSE composite volume that encompasses all stocks traded on the NYSE, not just on the floor, but everywhere. Not only that, but the VIX, the fear index, jumped 31.6% on those 2 days. So what you see is a real level of fear underneath the calm surface that emerged last week. Whether that continues or this is that's it, nobody knows, but it certainly is. It's got to be a concern for the bulls, and it's encouraging for someone like me to see that sentiment can be shaken so quickly.